I've been investing in property for around 2 years now, so let's compare my income during that period with the capital growth I've made on my investment properties. If you're new around here, my name's Harley, I'm 24 years old. I currently have 3 investment properties, looking for number 4 at the moment. Now let's start off with the income side of things. So in the financial year 2023, I made around $97,000 gross. After tax, that came out to around $73,000. To work that money, I worked 2 jobs 7 days a week. I barely had any days off, so it was basically just annual leave and sick days that I had off. My full-time job, I work around 40 to 45 hours per week, and I work as an associate broker. The income for that one was around $65,000 when I started, and then I also worked casually at BP another 20 to 25 hours per week, and I made another roughly $30,000 that year. Fast forward to this year, I'm on track to make $108,000 gross, which works out to around $85,400 after tax. Now let's break this down. So as I said earlier, my full-time job, I work as an associate broker, and I made $2,769 per fortnight this year. After tax, I make around $2,235 a fortnight. You times this by 26 fortnights, that leaves me with $58.1 thousand. Now onto my casual job at BP, I make around $1,380 a fortnight, which works out to $36,000 a year. After tax, I make around $1,050 a fortnight, which comes out to $27.3 thousand. This brings my gross total to $108,000 as I said, and after tax to $85.4 thousand. So if you add my 2023 income to this income that I'm going to make this year, that comes out to $205,000 gross for the 2 years. And after tax, this comes to $158,400 for the 2 years. Now, this isn't the most amazing money considering I've had to work 2 jobs 7 days a week. I'm currently in training to be a qualified mortgage broker. So once I'm a qualified mortgage broker, I should be making a lot more money. But in the interim, I wasn't willing to wait for my income to increase. I wanted to keep buying property, so I had to put my head down and bum up and get to work. Now, as I said previously, I own 3 investment properties. So the first property I went halves in, and we purchased it for $450,000 in September 2022. Now, this property will be conservatively worth $750,000. So that's around $300,000 worth of growth. Half of that's mine. So there's $150,000 of capital growth. Property number 2, I purchased entirely on my own back in September 2023. I purchased this one for $422,000, and I've just had a recent bank valuation and it's come in at $630,000, meaning that on this property, I've had $208,000 worth of capital growth. Now, the third property, I also purchased this one on my own, this time in a company and trust structure. I purchased this one in February 2024 for $390,000. Again, I've had a recent bank valuation on this property and it's come back at $456,000 in around 7 months. So a really great return. So that's $66,000 of growth in that time frame. Now, if you add all the growth of these properties during that 2-year time frame, it comes out to $424,000 in capital growth. Now, I know what you're going to say, this is a gross amount and it doesn't include any tax or anything that I'll pay if I was to sell the properties. So let's run through that now and give you a rough estimate of what I would pay in tax and what I would clear. Now, I would never sell a property that I've owned for less than 12 months because, as everyone knows, you get the capital gains tax exemption if you own a property for more than 12 months. Now, this isn't always the case with a company and trust structure, so make sure you speak to your accountant about that. But let's keep this general. So let's say that I can get the capital gains tax exemption for all 3 of my properties. So because I would never sell these properties before 12 months, I automatically would get the 50% capital gains tax exemption. So that means out of the $424,000, $212,000 of that is already banked and untouchable. Now that means that I'll be paying tax on the remaining $212,000. So if you times that at the highest tax rate, which is what I would be paying it at, that comes out to $95,000 in tax that I would be paying and leaves me with approximately $116,000 after tax. Now, if you add these two together, this comes out to around $328,000 after tax. And yes, it doesn't include any sales costs, any agent commissions or anything like that. But after tax, that's roughly what you would be getting. You obviously would need to include those other figures too. So that means if I was to sell my properties in the last 2 years alone, I would have cleared $328,000 owning those investment properties, and working every single day for the last 2 years, I only cleared $158,000. So more than double I've made owning investment properties as opposed to working every single day. If this doesn't say that you need to be getting your money to work for you, I don't know what will. I'm going to continue investing in property. Hopefully my income comes up with that along the way, but you can never outsave and outwork what your property can do for you.